Hello traders, good afternoon and welcome to the next in the Admirals webinar series. I hope you all well. I hope you can hear me. I hope you can see me, and welcome to the next in what has been an already fantastic session here in the 2021. And today we're going to be talking about trading the news, quite a fascinating topic for us all, one that we could actually cover for days and weeks in itself. Anil says greetings. That's great for you to be here. Thanks very much for joining us. So for all of you, if you're wherever you're watching this, if you're joining us here live today, or if maybe you're watching this later on demand, or you're watching this on our YouTube channel, fantastic. We always appreciate all the kind of the feedback and interaction. If you're liking this, give us a like. Okay, be sure to subscribe to the Admiral Markets YouTube channel. If you've got questions or comments, please put them in. We always really appreciate the feedback. Or maybe you've even got suggestions for one of some of the topics that you'd like us to see myself and Jens cover in the future. If so, please put them in there. We'll be really appreciate that kind of that feedback, that interaction. We do really take it on board because we want to make these sessions as helpful and as valuable for you as possible. So any kind of comments or thoughts are much appreciated. So great to see so many of you here today. Okay, and I'm sure there'll be some of you joining it. Lauren too, Anil. It's great to have you here. Thanks very much for that. And as I said, we're going to be talking today about trading the news, which is a pretty fascinating subject. And so, I always appreciate that we have a really wide range of experience here in the room who join us for our sessions. So I appreciate we've got complete beginners at one end of the spectrum and sort of experienced traders, at the other end. And of course, we always want to try and make sure that everybody can get, some nuggets of value that you can take away and, sort of embed into your own trading straight away. So if you would help me enormously, if you have experience of trading news, great, put it in there. Okay, let us know how you've done it, how you found it. Equally, if you're completely new to it, put that in the chat box and let us know what you know or what you think you might know, because hopefully this session will help educate you all, regardless of your past experiences. But as I said, great for you to be here. So without further ado, let's bring up the slides and then we can crack on, ladies and gentlemen. So just as always, just bear with us a moment, and we should be able to do that. So, boom. Here we go. Great. So I hope, as I said, you can all hear me. Hope you can see me. Hope you can actually see the slides. That would always be a great element. So thanks that Anil says he's new to trading the news. That's great. That's good for us to know. Hopefully by the end of this session, you'll just be a little bit more knowledgeable, have a little bit more insight, and have a particular tactic that you could take away and utilize in your own particular trading. So we're going to talk, as I said, about trading the news, and really we're going to be looking about how, if any way, that you can benefit from economic news releases. It is, as I said, it's a fascinating subject, right? We could talk about this for weeks, okay? Because as in you'll find with many ways of trading, like the old proverb of, the old saying that there's many ways to skin a cat. Yes, there are when it comes to trading the news. I'm going to give you my experience. Okay, I'm going to share with you a tactic that I will utilize and use, and hopefully that will give you a kind of a simple way that you can actually sort of start to look at how markets operate around news events, and actually how you could actually look to sort of engage with them, engage with them yourself. So those of you who are joining us for the first time, you may have noticed, you may not be, that in fact Admiral Markets is now sort of transitioning across to Admirals. That's the new name as part of the 20th anniversary rebranding. If you're already a client of Admirals, you have no worries. It won't really make any difference or impact in terms of the way you engage with Admirals or engage with markets. It is just a 20th anniversary rebranding exercise. And if you've got any thoughts or you'd like it, maybe you like my new kind of virtual background, please, we'll happily take all thoughts and comments on that. But as said, we are Admirals now, okay, and it's a global Forex and CFD broker, it has global presence, but with, local contact and support. They're regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products and allowing you the opportunity to engage with markets with both MT4 and MT5, and also Admiral's own Supreme Edition. So if you have any more questions about Admirals, then please get in touch with your account representative. They'll be very happy to help, or I will provide you some contact details at the end of today's session. So what are we going to talk about with regards to trading the news? Well, we'll talk a little bit about, why do people trade the news? Okay, what is it about it that kind of, sort of attracts people towards that? We'll talk about what do we need to be aware of, and as I said, we'll also talk about, well, how can we best trade the news? And as I said, I'm going to share a tactic of my own, just quite almost like simple, I'd kind of sort of say systematic way that you can actually sort of trade news based upon your experience, the way you get to operate and engage with markets, okay, making the best use of the tools and resources that you have here with Admirals and their platforms. So as I said, if you're completely new, that hopefully might give you just a little bit of insight, a little bit of, an opportunity, but equally, maybe if you're an experienced trader, and you've traded the news regularly, it would be great to hear what your own experience has been. If there's anything particular that you found works really well for you. I'm always, I'm very much a believer in that. It's about there are many different ways to operate effectively within financial markets. Okay, there is no one way that is my way or the highway. Okay, there are actually lots of different ways, lots of variations on themes. And it's about actually finding the one that works the best for yourself, and that's I'm very keen on that. So if you have experience of trading the news, I'd love to hear it. Okay, and I'm sure the other people here joining us would appreciate your own sort of thoughts and insights. So please feel free to sort of drop a couple of comments there. So for those who don't know me, my name's Paul. I transitioned to trading after a career in the military, and I've traded for hedge funds and for high net worth individuals. Primarily, I look to trade, focus on FX indices and commodities. For longer term trading, okay, I tend to be a trend trader. And for shorter day trading, okay, intraday trading, I tend to be a reversal and a mean reversion trader, which there will be maybe a little element of that will come into to play with today's session. So let's talk about trading the news then, ladies. Let's cut to the chase, shall we? Come on, we're all traders. We appreciate why you're here. You want the good stuff. You want the sort of the juice. Well, as the slides say there, most financial markets move because of new news and economic data releases entering the market. All right, we all trade markets, we all look at markets, we all sort of enjoy markets, but sometimes it is important to understand what those markets are for. Okay, why they're there, and what is it that actually shifts or makes makes market moves in new particular directions, or in a new theme or a new trend. All right, and it is invariably it's that news coming in. Now sometimes that news could be informal news. Okay, so maybe there is maybe there's a disaster, maybe there is a geopolitical change, like the kind of like the COVID what we're living through, but also there are what I'd call formal economic data releases, okay, which are invariably could be about a company, could be about an industry sector, could be about a country, could be about a trading block, could be about a particular currency, for example. And it's those formal economic data releases that invariably, as that news comes out, these events can lead to what can sometimes be volatile short-term movements in markets. And many traders are attracted to trading around such news events. And today we'll discuss one way that traders can take advantage of these situations. So invariably what we see is that, lots of new traders, they look at charts and they look at, where there's, huge kind of big spikes or big moves, and then suddenly they're attracted to that because invariably they think that kind of volatility, the kind of big moves is something that they could profit from. Okay. And invariably that's why they're looking to engage with markets. But, the key word is volatility there. Okay. And we're going to come back to that in a few slides time. But those news events and as I said, the possible short-term movements we see off the back of it, that does attract lots of traders, and lots of traders from both, as I say, from complete beginners to very experienced traders. All right, and we're going to talk about that and discuss, what I've learned in my own experience, what tends to sort of be the the smart way to operate based on the tools and resources you have access to, and how you can actually sort of how you can sort of utilize some of the tactics, or one of the tactics I'll share with you in your own particular trade. So be interested to know, as I said, if we've got a good few people here joining us today. How many of the people here joining us, how many of you actually trade the news? How many of you actually focus on trading specific news events? It'd be good to know if you have, just even if it's just yes or no. Maybe it's just a thought of, you've had some experience there, okay, as always. So Claudia, hello, Claudia, nice to see you here again. Mohit says yes, he does, okay. And it's Just said never tried. Okay, great. That's super. That's why you're here. That's why these sessions are on. Just I hope I've pronounced your name correctly there. Apologize if I haven't. But the whole idea is we're here to try and help educate you and provide you with some great insight into into all of these various different trading events. So let's start at the beginning here, okay? Let's strip it back. Is that and one of the things you have to remember when we talk about trading the news, it is effectively you need to know when the news is coming out. Okay, you need to understand the news, and you can see there that my fantastic assistant has just put a little poll up there, okay, in terms of trading the news. That's fantastic. It'd be great. And just hit away on that. Okay, that would be great. That's good to it's good for us to know. Thanks for that. Just keep an eye on that. But as I said, when trading news, you first have to know which releases are actually expected that week and that day. Right? It's important to know that. And regardless of if you're actually going to trade news or not, a good trader, especially if you're operating on an intraday basis, you should be knowing what the major news is coming out that day, that week ahead. Okay, it actually should be part of your trading routine. Okay, just to check the economic calendar to ensure that you know when the news is coming out, because you don't want to be on the wrong side of it. Okay, you don't want to be putting into a trade 15 minutes before a big news announcement, because actually you could get sideswiped quite easily. Well, it's important to know that, and as I said, it should be part of your routine, part of your behavior. But what we can also do here is Admiral Markets are here to help you. What you'll see is a little link there, admiralmarkets.com/analytics. Okay, /analytics can help you. And that's a new and recent page that we've developed here that not only gives you some knowledge of what kind of news is coming up, but also just gives you a little bit of additional insight, a little bit of additional, let's say, color, okay, to the landscape that is out there. And it provides great insight on upcoming news events. And also you can find quite a lot of the videos from our previous either trading spotlight or Marcus's morning trading slot. Okay, so as I said, admiralmarkets.com/analytics can help you. And at the end of this time, I'll just switch across to that and I'll have a quick look at it just so you can see what it offers it. But it is important, okay? First thing, before you're even going to think about trading news, you need to know when the news is coming out, okay? These are the formal economic data releases, okay? So make sure you know that. It should be part of your trading routine at the start of the week, at the start of every trading day. So that's the first thing. The second bit, well, we're going to focus on trading the FX markets today, all right? Now, invariably around news events, okay, especially if you're particularly looking, let's say equity-specific news events, of course, that will have, you'd be looking to focus on that. But we're going to focus on FX markets today, and maybe, in future sessions, I'll do one about trading specific equities news, okay? And I know my friend Marcus and Jens are very good about it, and quite often we'll post elements about that on our trading spotlight page on Traders Yard. But today, we're going to focus on FX markets today. And what I also tell you is to focus, this is important, take on board, really only look to focus on trading what you might call tier one news events, okay, which are invariably the sort of the highest importance, okay, most important news pieces. Okay, that's what you can do there. Okay, so what you have there is my wonderful assistant there has just posted there in the little chat box. Okay, so you can pin on your browser for quick access to that page to be on the top of market news. That's great. Thank you very much for that, Anna. That's great. Make sure you make use of that. Okay, it's a great little tool and resource for you to have. But as I'm saying, only look to trade what might be called tier one news event. Very important. Okay, trying to trade everything, small bits of news. generally pointless, ladies and gentlemen, right? But certainly with FX markets, okay, what you're looking at is, when there's news coming out, things like interest rate decisions, they're always hugely important for FX markets. Also, inflation, okay, regardless of whether it's consumer or producer, okay, just inflation numbers. Also, unemployment figures, okay, and the big one for the unemployment figures still remains the first Friday of the month. Is the NFP, non-farmed payrolls, okay. So would be here in the UK. It's released normally around about 1:30, okay. So 1:30 there, 8:30 US time. And invariably, that might be different for wherever you are joining us, because I appreciate we have a global audience who come to join us for our sessions. But that is still the big number, okay, and we're going to look at that a little bit later on. Things like retail sales can be important, industrial production numbers, business sentiment surveys, okay, they can be relevant. Trade balance will be of interest, okay, when you see numbers coming up for that, and also things like manufacturing sector surveys and things like purchasing managers index, etc. What you will find is the importance of those news alerts will change, okay, as we're in different parts of the economic cycle, okay, or the business cycle with the economy. The relevance, okay, of those particular news events will change, but they are still important ones, and you'll very quickly understand which ones the markets are really sort of taking a keen focus on. So not unsurprisingly, okay, this last year when we've gone through COVID, things like unemployment numbers, okay, were really very key, very important, because they gave an insight into confidence and into both the economy and the markets, especially with the US, and so that's very something to sort of to keep important of. And also, is it always the first Friday of the month? Yes. Yes, it generally is. There might be 1 or 2 months where it changes, but just because of the way the month has started or ended. But as a general rule, okay, first Friday of the month, non-farm payrolls, okay, which is really about this kind of the jobs created in the previous month. I think excluding kind of farm work, military work, okay. I think there might be another civil service jobs, etc., within the US. But either way, what it does is it gives you a quick snapshot, okay, of the health of the US economy. And of course, as we're about to come on to, how that number comes out can actually have a huge impact on how the market plays out after the news has been released. So when it comes to trading the news, okay, if you wanted to sum it up in one word, okay, in terms of the importance of it, or what the relevance of it is, if it's one word I would use, is it's expectations, okay. How the released news reflects against expectations will make a big difference in how this market will move, okay. And this could be, as I said, we're going to focus mainly on FX, okay. But let's say that it is the NFP number, okay. If the expectations are for 200,000 jobs, okay, to have been created in the previous month, and the number comes in either wildly above or wildly below, way away from the expectations, well, that of course that creates there's a schism there, okay. There's a little bit of, you might even say, sort of an element of cognitive dissonance between what people are expecting and between what people get, and it's invariably that's what kind of triggers kind of fear, greed, and hope in traders, and that is what induces volatility into the market, okay. So it is important it's not just the number, it's how the number was against the forecast, against expectations. Was it spot on? Was it much better? Was it much worse? Because those were the things, okay. That initial kind of shock perhaps is what induces volatility as traders effectively start working through fear, greed, and hope to try and understand what's going to happen, how that number has changed, that, okay. So what you'll see in the chat box there is that Admirals have also effectively got an article out about trading NFP, which you can find that link there. So of course I would definitely sort of suggest you take that on board, utilize that resource, and bring that into your own trading. So, so what we're going to say is, with that, let's have a look at one way that we could safely trade these economic news releases, okay? And I'm going to share with you just a simple tactic, because I appreciate you have a wide range of experience, just a simple tactic that would allow you to engage with trading around major news events. There's lots of different ways to do it, okay? Some good, some not so much, okay? And as I said, we could talk about that for weeks on end. I'm just going to share with you one kind of specific tactic that you might be able to take on board and utilize yourselves. So, as I said that, and I've said there a little earlier, okay, news events can be volatile, okay, and it can be quite dangerous for uneducated traders, right? Because things happen very, very fast, okay? Things will move, okay, very, very quickly. And as I said, if the news is very different from expectations, it can very often move not in the way that we were expecting it. My own particular, this is my own particular sort of trading style, my own particular trading beliefs is that, as a private trader, don't bother trying to predict news moves, okay, or enter immediately on news releases. Sometimes it's very new traders, they see a news comes out and they see the market flash away, and invariably they want to try and hit the bid, okay, or sell the market, okay. My view is don't bother trying to predict the news moves, okay, all right, or entering immediately on news releases, okay. That to me is not a sharp or smart way to be actually trying to trade news releases. Well, my suggestion is that you wait for the news to be announced and then allow that initial volatility, that spike of volatility to subside, and then trade a very small breakout, okay? That is my suggestion. As I said, there are many, many ways to do this. Lots of people trade this in lots of different ways. I'm going to share you with one way that, as I said, allows you to engage, but also in line with the kind of the tools and resources that we have at hand with us here at Admirals. So, as it says there, how do we actually do that? Well, here we go. That's what I'm going to share with you now. So here we go. What you do. First thing, as I said, check your FX news calendars, okay, for high impact news events that are coming week or day. That should be part of your standard trader's routine every single day, regardless of whether you're trading news or not. 2, choose the FX pair that reflect the news. So if you're going to be, if that day the most important piece of news coming out is, let's say, news, from the UK relating to sterling, well then, you know what? You'd probably be best to try and focus on trading the sterling pairs. Now, as a bigger picture, take this on board, okay? Is that, remember, the US still the biggest economy in the world, and over 50% of over 50% of FX transactions include the US dollar. Okay, US dollar is still the reserve currency of the world. So, invariably looking to start somewhere. So things like NFP, major American news announcements, and trading the US dollar with that against what might be useful crosses. But it is important, and it might seem very simplistic to say, that if you're going to trade, a European news event, well then focus on the euro pairs. It might sound quite simplistic, but I've learned that many people don't fully make that connection. So I'm just blatantly stating it there, clear as day for you. What we're going to do then is we're going to look at the 5-minute chart. Choose the 5-minute chart, whether you're using MT4 or MT5. Just having a standard chart setup, okay? So, I think on there I have, just a couple of moving averages and just, candlesticks there. I don't actually have much on there. You could also have a 10-period ATR on the 5-minute that can be helpful, but that, I'll explain that later on. But what you're really looking to do is to just to be able to see the price action. You don't really need to have it cluttered, your charts clustered with too much things, because there's lots going on, okay? Things might be happening very fast. So you want to be able to just have clarity in your charts. As I said earlier, wait for the news to be announced, all right? Don't try and preempt the news, okay? Some people do that, okay, because they're trying to be a smart aleck, okay, as we would say in the UK, all right? And that's the polite way of me describing it, okay? Don't try and be a smart aleck, okay? Don't try and preempt the news thinking that you know best, okay? The likelihood is you don't, okay? Don't trade during the actual news, okay? When the news comes out, as I say, some people, they see the flashing lights and they just want to hammer the keys. Generally, suggestion is don't do that. Instead, watch how the markets react, okay? Watch how the markets react. In particular, I like to see a strong move in any direction. If the news has come out and it's just made a very small little move, I'm kind of not interested. What I'd like to see is the news come out and for that market to make a strong move in any direction, okay? In any direction. I'm not really too fussed in any direction, okay? Because, however, very often the first move can be the false move. Not always, but very often the first move is the false move. Remember what I said a few slides there earlier? It's about expectations, okay? And so what happens is, if the news has come out and it's wildly different from expectations, well, then people panic. People start hitting the bid and they start punching buttons and mashing keys, okay, and trying to just basically just do whatever their kind of monkey-like brain is taking on board in that particular moment. And so very often what can happen is that very often that first move might actually be the false move. Not always, but more often than not. Anil says, what is a small move to you? Well, that's a very good thing. And part of that would depend upon the particular currency that you're trading, hence where the ATR can actually help you a bit. And also, if the 5-minute ATR is let's say 10 pips, okay, and the market after the news has jumped 80, 90 pips, that's a big move. If the ATR is 10 pips and it's actually only moved maybe 8, 9, 10, 11 pips, it's not really a big move, is it? That is what the average, that's what the ATR is expecting for it to be around there. So, what we want to see is, as I said, we want to see extreme moves, okay? And even visually, okay? Even visually, if I just here, let's bring up the old quick drawing tool here, okay? We can see here, this is when news come out. Hopefully you can see here, okay, that, generally, okay, they are very, very small candles. And then we get one huge, big candle there, okay, when the news has come out. It should visually stand out from you, okay? You should be able to stand out in there and see it, okay, and be able to sort of recognize quite quickly and quite clearly that, that this is a big move. Or alternatively, there's just nothing happening. It's a bit of a damp squib, as we would say in the UK, and actually better off going to do something else. So, as I said, we wait, okay, for the market to announce its news and for it to make its first move. What we're looking for then is watch the 5-minute bars until they form a tight range of 3 bars, okay? 3 bars indeed, which I've just drawn there on the kind of the little blue box there on it. This is very often called a 3-bar breakout. Okay, this is what the tactic is going to be. It's going to be a 3-bar breakout. Now, what we're looking to do is once we start to identify after that initial thrust, okay, and then it kind of price starts to consolidate, okay, starts to get into a smaller, tighter range, and the tighter the range, the better. Okay, what we're looking for is we're waiting. The market has made its kind of, let's say, its impulsive move. Then everybody sort of just slows down, right? I'm always talking about how markets, they surge, then they rest, then they surge, then they rest. Markets surged on the news. Now it's the rest, and now we're waiting for the surge itself. And I said, get ready to trade a breakout of the range of those 3 bars. Personally, and as I said, this is my, I'm sharing you my personal experience, I prefer a move against the first news, okay? Remember what I said is that very often, not always, but very often, the first move, okay, the first big move out after news can be the false move, okay? It'll go the other way, and then actually what we see is that during that kind of 3-bar kind of tight range, very often the price can reverse there. And, as we can see here, okay, just drawing tool, the news came out here, we had, a couple of big bars, but then actually, we have, kind of a shooting star there. And then actually what we've now got is there's a range there, okay? Those 3 bars are within that range. If you also know your price action, okay, your sort of price action candles, you might actually also recognize that that is an evening star, which is also a candlestick reversal formation. If you want to know more about that, you will find plenty of videos from myself and Jens and Marcus on the YouTube channel, okay? So be sure to go in and check those out. But that's what we're looking, surge. The market then rests and consolidates, and then we get ready for another surge again. And hopefully you can see there, after, kind of in that sort of 3-bar range, well, then actually, we broke out, and you can see price actually went against the first move. Remember, I was saying very often the first move is the false move, then it reverses and actually drifts its way in the opposite direction. And that's quite a simple. And the good thing about this is, if you're allowing the market to have its madness, okay? Allowing the market to have its madness moment, you just sit, wait, watch, okay? You can kind of like a sniper, wait for a particular setup, and then looking to trade out of that, okay? And it allows you to operate just a little bit savvy, okay? Be a little bit smarter in your operation. And which bar is the entry point? Well, what you'll find is, once you've identified, okay, you've got 3 candles there, 3 bars, okay, that are, basically making a tight range together. You're looking to trade in the opposite direction against the first move. So you'll be looking to basically short in this particular case. Once you've got the low of this candle, you'll be looking at effectively. Then you're looking to sort of your short would be there. Okay, so short normally kind of 1 pip beneath that range, and we're about to come on to that in the next slide. So all the specific details will be here. But for this moment, I just want you to be able to recognize, okay, that's happening. I'm not trying to predict, okay, we're not trying to trade on the news release itself, okay, we're actually looking to basically wait to after the initial surge. Anil says you've got a fib on there. Yes, I do. All is about to be revealed. And also, it's good to know that you're clearly paying attention. That's fantastic. That's what we like to see. That's all good. Just bear with us over the next few slides, and all of that will be revealed for you. So, as I say, very often the price action within those 3 bars will provide an indication of likely direction. Okay, remember, often the first news is the false move. As I said, this is also, in that particular case, that's an evening star formation, which is a reversal formation. Your entry is the break of the range, and your initial stop loss is the other side of the 3-bar range. Okay. Freeze, you're very welcome. Freeze says, thank you very much for your answer. You're very welcome. Listen, I'm here to try and help. Okay, that's what we're here for. But as I said, once you've identified that kind of tightening of a range, your entry is the break of that range, and we're expecting that to go the other way, okay, against the first move. And your initial stop loss is the other side of the 3-bar the range. Okay. So Anil says the evening star is the cue must have. But yes, well. True. Anil's asking if they can have slides at the end of the webinar. If you ask the assistant, we might be able to arrange that. But the important thing is here just to try and understand it in this particular moment. And of course, as I said, this video will be on the YouTube channel very shortly afterwards as well. You'll be able to watch that and listen to me to your heart's content. So once the trade is triggered, and the next 5-minute bar is completed, you move your stop behind that bar and leave it there, so that we're reducing the trade risk at the first opportunity. And I would call this FBS, the first bar stop. So in this particular instance, we had a kind of a small range here, okay, 3-bar range. It actually tricks it. It just literally triggers us in. And then first, remember, the initial stop is actually, the other side of the range of those 3 candles. But then after that first candle is completed, we then move our stop down to just above the first bar. Okay, first bar stop. That's it. We're just looking to reduce trade risk. That's what we're looking to try and do here. And what we're looking at is, I leave my stop at the first bar stop until the trade either stops out or hits target. As I said, this way, I'm always reducing my risk on the trade. Okay, that's what I'm looking to try and achieve. So Anil says 3 pips above the high. Normally, what I would have is 1 pip plus the spread. Okay, that's the way I would normally look to operate myself. Some people might put 3 pips. Some people put 5 pips. Generally, when I'm shorting and my stops the other side, it'll be like 1 pip plus the spread. That's what I'm looking to where my stops will be. So we know where the entry is, we know where our stop loss is, and we know where we move our stop. But on the other side, okay, we also want to look at how, where could we look as a profit target. Personally, for me, what I look to do is I look to use a Fibonacci extension of the 3-bar range for my target. And I can base my target on the ATR and the fib extensions. Okay, there is an old trading saying of "Don't be a dick for a tick," and that's true. And ideally, what I'm looking for is if the range of the 3 bars, okay, all right, is much bigger than the ATR, then I will only aim for what we call the 261 fib extension here. I'm just going to draw this in here. Just bear with me a moment, a second. What we can see is, the news has come out on the big bar, and then actually what we see is, you can hopefully see there's like 3 candles there. Okay, then it's like a little block. It's a little, we've had a surge. Now we've had a rest, and now I'm getting ready, okay, for the next surge, okay? And because, what I'd be looking for is, I would be using the fib extension tool drawn over the size of that box to give me my first target. If the range of those 3 candles is big, well, then I'd only be looking for the 261, okay, as a target. If it's not, if we've got a good time, well, then actually what I'd be looking for is the 423 fib extension. Okay, that's it using fib extensions. Okay, and that is how I prefer to do it. But I'm going to show you a couple of alternative examples, because I appreciate we have a wide range of experience. So yeah, I look to use the fib extensions of the 3-bar range for my target. If it's a small range, I'll usually go for the 423 fib extension, including spreads and slippage. That can very often provide me a nice 2.3 to 3.3 reward to risk. Okay, that's a good trade for me. That's a good news. Okay, I'm always looking for asymmetric reward to risk ratio trades. If you want a simpler targeting option, well, then just set a 3-to-1 reward to risk target for the trade. Okay, so once you've worked out where your initial stop is, your entry is, and you're able to sort of identify what the trade risk is in terms of pips, well, then just multiply that by 3 and have that as a 3-to-1 reward to risk target for the trade itself. Okay, and if you want to just keep it simpler, as I said, I like to use the fib extensions. You might, to begin with, just want to keep it even simpler than that. And I also appreciate that some people like, instead of using targets, they actually like to trail their stop loss from being a stop loss to being a stop profit. Okay. And what I suggest, if you want to do that, is that you just use a simple 3-bar trailing stop. So every time the next candle completes, you're just effectively moving your trailing stop behind either the high, okay, of the last 3 candles for a short, or beneath the low of the last 3 candles if you're in a riding trade. And you can see in this particular quick example, okay, having created a very small, nice little range there, with 1, 2, 3 candles, okay, the trade, you can see there, the trade broke out. Effectively, remember, your first stop is here, then your stop is moved there. Normally, I would just leave the stop there, but what you will also find is that some people, as I said, and you can see it there, is that every candle completes, they might want to trail as a 3-bar stop, and then invariably you are stopped out there, okay, when it just trips above it a little bit. So, I'm giving you a few options because I appreciate that some people will, have very different ideas about how they want to operate there. So so this was hopefully, there's some examples here. Okay, just this was the non-farm payroll. I said the American job number. This was trading the euro against the US dollar. You can all see the big candle from the first, okay, from the actual first the news, and you can see the volatility there is the market is traded all over the place. And then we wait, and we have to wait, sort of 25 minutes for our trade. But you can see there's 3 small candles there together. Okay, let's just draw in 3 small candles there together. Okay, all right. And it's actually when we get a breakout of that becomes our trade. Okay, so as I said, you might have to wait 20 to 30 minutes afterwards to do it. But that's fine. We're here to take winning trades. Okay, we're not here to sort of try and be right. Okay, we're not here to try and sort of guess. We're here to sort of try and be to take winning trades, and that's actually what we're looking to do. Okay, so as you can see there, at that time the ATR at the time was 11, and the actual range of the 3-bar breakout was 11 as well. So actually, the 423 fib extension target was valid, and it hit that for plus 34 pips in the end. Okay, so it's just nice and simple. Okay, nice and simple. And if you'd have used, if instead of using a target, you'd just use the 3-bar trailing stop, you'd have been in the move for like 40 minutes with having to move the stop loss 4 times, and you'd have been taken out for plus 17 pips. Okay, so there is no perfection with trading. All right, there is no perfection with trading. Some people like to use targets. Some people like to use trailing stop profits. All that matters is that you have a simple method that you can follow, trade after trade after trade after trade. That is more important, because there is no perfection. Okay, you're never going to pick the exact entry. You're never going to pick the exact top or the bottom of the move. Don't try. Okay, you just waste time and energy. You just want a piece of the move. That'll do very nicely. And even you've just taken that 17 pips. Thank you very much, and away you go. So these were examples. This was the Kiwi against US dollar on that NFP, and hopefully you can see the madness of the big move. And then we get 3 candles, okay, where we consolidate, and then bosh, we actually move. And we can see the initial move was up, and then actually, which was the false move, and then price traded down and away from it. And you know, they at the time there it says the range of the 3-bar O is 12, okay, and the ATR was 0.09. So the range was bigger than the ATR. So actually, just use the 261 target, okay, and it hits the 261 for plus 19, okay. So that's it. You know, if it's a big range on it, you know, bigger than the ATR, well then just adjust your target accordingly. And if you'd, as I said, if you'd wanted to use the 3-bar trailing stop, you'd been in approximately 44, and you'd have been taken out for about plus 8. Okay, so as I said, there is no perfection. Okay, you just find a way that you can trade quite easily and happily. So I've got some examples here, but you know, we won't be able to go through all of them, unfortunately, today. So I will flick through them, but hopefully you're getting the idea of what we're looking for. Okay, we don't try and predict, don't try and trade the news release. Let the market announce its news, make its mad move. Wait for the market to consolidate. Okay, when we get 3 5-minute candles that actually very nicely, and preferably in a small little tighter bar, then we're looking to trade a breakout of that. And very often that is back against the initial move, because the initial move can be the first move, or the first move can be the false move. Okay, so it's a case of what we can have here is that, yes, I think Anil's just asked that you are able to, if there is a second trade, you're able to sort of, if the first trade doesn't work out, well then actually you are allowed to sort of take a re-attack. Okay, just once again, just looking for a little bit of consolidation, a little consolidation, and then waiting for a breakout from that. So, here's an example here where actually the first trade, the first little 3 bars, actually it didn't work. Okay, so we had a breakout, first bar stop, and got taken out on the first bar stop, which, as I said, you can see here. Okay, the first move in the news, okay, was up, and as I said, very often the first move is a false move, and what actually happened is, first bar gets taken out, but then it creates another little tight 3-bar range, and actually now we're short the market, and as you can see, it went all the way down. Okay, so as I said, don't be surprised. It can happen because you're trading 3 months, and there can be volatility. Remember, volatility is a double-edged sword. All right, it looks, when you're on the right side of it, it fills your sails, it takes you to your target, glorious. But equally, you can be on the wrong side of it very easily. As I said, volatility is a double-edged sword. Anil says, Kushti, well, thank you. That's I appreciate that and stuff. So Anka says, what happens when the price goes in the same direction? Well, that can happen. That can actually happen. And if there is no false move, as I said, that can happen. Very often it's a false move, but not always. In this particular case, the initial 3-bar breakout was actually to be a buy to carry on with it, but actually it didn't. It failed. And what happened is the market actually reversed and as you can see yourself, collapsed away. And here's, as I said, there's quite a lot of examples here, okay, as always, just to give you a little bit of a feel and a flavor for it. But, I'm not going to go into everyone because I'm hoping by now you can already see, the big move after the news. We see 3 bars where it actually becomes a tight little range. And then when you get a breakout of that, okay, you can see how that particular market plays out there. Okay, that's it. We just don't try and preempt it. Don't try and trade the news. Okay, let the news come out. Let the market make its move. Let the market, expect the first move to be a false move. And if you get to see the price action, 3 nice 5-minute candles closing up tight and then going the other way, that gives you an opportunity. And as I said, there's just lots and lots of examples here. Okay, so we can see, hopefully where the news is released. Okay, and kind of the first move is a down, and then actually it takes a little while. Okay, it takes a little while for us to get like kind of 3 little candles in a small little move. Okay, before we get a breakout of that, and then the first bar stop, and then actually you can see it's it goes its way up to its target. Okay, so that's what we're looking for. Just keep it nice and simple. As I said, there are many ways to trade. Many ways to trade it. So Anil says, so you're fading the initial surge with a tight 3-bar cluster. Ideally, preferably, and no, that's what we're looking for, preferably. Okay, so as I said, it doesn't always the case that the first move is a false move, but very often it is. Okay, and when you get that big first initial move, tight cluster, which also sometimes happens to be reversal price action as well, you've got a confluence of events there, okay, that is a trade opportunity, all right, and it's up to you. It's up to you to be ready for it. So, you know, just as I said, lots of examples and different kind of currency pairs, okay, but I'm hoping, as I said, you can see bosh, move, as Anil said, a tight little 3-bar cluster afterwards, and then you can see for yourself what actually occurs there. Hopefully that, you know, just gives you, it's very clear, it's very visual in terms of, you know, what we can expect and what you can see. So Anchor says, do we place both buy and sells? Not generally, okay, because things might happen there. What you'll probably find is that you'll probably be entering at market, okay. If you can set an order, great, but I think what you'll find is you'll probably be looking to trade at market, okay. And that's what you're looking at. And, you know, and if in this particular case here, you know, once that market has moved there and we can see there's a tight cluster and we can see that that has wicks there, okay, a couple of candles, we're expecting the market to go south side, to actually to short. So you'll be ready to know, to understand, to trade at market, okay. And the thing is, by this time now, you know, the initial sort of madness, okay, is normally subsided. And I said, you know, we're starting to get the what could be the real move here. So, as I said, there's lots of examples here, but unfortunately, you know, as always in these sessions, we're running out of time a little bit. So hopefully you can, I'm just going to very, very quickly flick through, and hopefully you can already see, you know, big move, tight cluster, trade the opposite direction. Bob's your uncle, all right? And that's what we're actually particularly looking for. And I put lots of examples in here because, you know, it always helps, doesn't it? It always actually helps to do that. And as you can see, there's plenty of them there to do that. So what you can do is when you watch this later again on the YouTube channel, take a little bit of time, go through and actually have a little look at the price action and to sort of just try and get an understanding of what I'm actually sort of saying here in terms of trading that. So, in conclusion, ladies and gentlemen, many traders are attracted to trading news events, all right? But it's important to know what are the major news events coming up for that day and week. You should stick to trading only tier 1 news events, your top-end news events, okay? Don't try and trade every news event. It's pointless. It's rarely effective to try and predict what will happen, okay? It's not as easy as people think it will be to trade the news, okay? So what it is it's important to see how the news release is compared to the expectation. When there's a big difference there, that's when we tend to get, you know, knee-jerk impulsive trades, okay? That is what induces that volatility. But remember, ladies and gentlemen, volatility is a double-edged sword, all right? You always have to, and it's why we're always really important on managing risk. And the method we've just described there is quite literally a simple 3-bar breakout of consolidation post-news, okay? Market makes it surge, consolidates, you know, surge, it rests, and then it gets ready to surge again. And ideally, it should be preferably against the first move, because very often the first move is a false move, and that's what you can look at. So, unfortunately, we've run out a little bit of time. I apologize, but I'm hoping you've got the understanding of it. If you want to ask me more questions, okay, about this, you want to sort of go, well, come and join us on the Trading Spotlight community on Traders Yard, okay? My colleagues, Marcus and Jens, they're always posting fantastic stuff there. I'm going to be there this afternoon, okay, after this session. If you've got questions about this or any of the other sort of trading challenges or issues you're dealing with, join us, tradersyard.com/group/312, and I'll be very welcome and happy to help you. Remember, don't forget not to join us next time, okay, where we'll effectively, it'll be Wednesday, apologies, it'll be a case of what happens when algos go rogue, ladies and gentlemen, all right? That'll be on Wednesday, how algos operate in markets, what to expect when they go wrong, and how to manage your trading around such events. And that's Wednesday, 31st of March. Check your inbox for the webinar link or head over to the Admirals site to do that. I hope you found that useful. I hope you found that kind of interesting. If you want to contact us, well, you can do, okay, global at admiralmarkets.com, youtube.com/admiralmarkets, or facebook.com/admiralmarkets global. So just bring it up to finish. There you go. So thank you very much, okay, for joining us. I'm afraid we're running out of a bit of time there. There's always good questions, okay. So it's great to have the interaction as always. As always, I wish you the very best success in your own trading. If you've enjoyed this, if you like it, give us a like, okay. Make sure you subscribe to the Admirals YouTube channel so that you get all all of our content, both from myself, but also from Marcus and Jens. If you've got questions, if you're watching this later, stick that in the commentary box, okay? If you've got questions, and as I said, if you've got ideas or thoughts for future sessions, please put them in. We'll happily take that on board. Thank you for all your comments. Thank you for all the thanks. That's very kind. I hope, as I said, you found it very insightful and useful. And yeah, trade well, ladies and gentlemen. And I will see you at the next Admirals webinar series. Take care, everybody. Cheers.